don't get a credit card.
Absolutely
the minute you
not.
get a credit card, it's like you're falling into this hole of debt. Like Afterpay, same thing. If you can't afford it today, what makes you think that you can afford it next week or the week after when you're still having to pay it off?
Welcome to Where's My Money? One man, $1 million of debt, one podcast to find a way out.
Welcome back to an all-new, all-natural episode of Where's My Money? I'm Reagan White, and I still owe $1 million to the bank in the form of a mortgage on the house that I live in with my family. If you've got questions about money you want to ask our experts, or you want the latest tidbits from the pod in video form, chuck us a follow on Insta, please, and make sure you subscribe to the podcast on the platform of your choosing. 5-star ratings are also appreciated. And don't forget, we're now on YouTube, which means I need to start wearing a bit of powder on my bald, shiny head so you don't get distracted when you're watching the video. Debt is an interesting thing. Yes, it can be helpful in times of need, and if you're really good with money, debt can be used and managed in a way that can make you more money. Yeah, there's good debt and bad debt, and it can be the difference between you sinking, treading water, or really thriving. Challen Wilson is a regular Kiwi who realised she was closer to sinking and reached out for help. Her story is awesome, and she'll tell us how it feels to master money later on in the episode. Plus, the legend herself, Hannah McQueen, is in to answer some of your burning cash questions. First though, Vinnie and Karen, two of the legendary coaches from Enable Me, are in to unpick the messy world of debt, trying to get on the property ladder, and our old frenemy, the credit card. Let's get into it. Just quickly, a reminder, this podcast isn't here to replace financial advice. We can't take your own personal circumstances into account, and we highly recommend that you seek advice from a trusted financial advisor, strategist, or coach, or other financial advice. And that is what Vinnie and Karen from Enable Me give people like you and me every single day. What's the very first step if you're serious about buying a home, but you don't have a deposit yet? Where do you start? Karen?
I think you need to start by working out how much you need to save, what you can actually afford, and don't set your expectations too high to start off with. You know, like your first home's not going to be your forever home. So I think it's just really important to get something that you can afford, but you've got to be able to save the deposit. You know, I've always said to people, like, if you can work out what your mortgage payment's going to be, see if you can save that amount. Like, take off your rent or your board that you're paying and then save that difference. And if you can do that, then you should know, you could have some confidence that you're going to be able to pay your mortgage payments going forward.
Yeah.
But the most important thing is just to have a goal. Like when I was saving for my first home, I know this sounds really old-fashioned. We were just talking about all the technology and that. I drew a picture of a house, and every time I saved like $1,000, I'd colouring on a brick. But, you know, that's what I did, because to me I had to have something visual to aim towards. So whether or not you have like a mood board and that, but you've got to actually have a goal. You've just got to think to yourself, there's a lot of stuff that we spend our money on we don't actually need. And you need to sort of say, right, well, if this is what I want to achieve this, then I need to cut back on some things temporarily just to get me a deposit, and then just seriously think about what does having a mortgage look like, because the reality can be different to renting or boarding.
And there's a lot of tools around in terms of calculators to show what a repayment could be per week, per month, and maybe working backwards from what you can realistically afford, then to see what that property price could be, rather than going to the bank and letting them say what you can borrow, because I think we nearly fell into that trap. We didn't quite max out, but it's tempting when the bank says you can borrow $1.2 million to go, well, if the bank said I can borrow 1.2, I'm borrowing 1.2 because that means I can get the house at the pool.
Exactly. And like Vinnie and I were saying when we came over here, like, you know, my background is I worked in a bank for 36 years, two different banks. But what the bank says you can afford is different, because it doesn't bring in the stuff that you actually fritter away. Like, it actually works out what you have to pay for, and all the disposable income they say is disposable, but the reality is that's what we're spending every day. So when you get a mortgage, yes, on paper it looks like you can afford it, but the reality is you can't go to the pub.
Well,
because those things aren't built in.
And on top of that, not just fritter, but unexpected things, right?
Yes,
like if you need to go and replace the washing machine and the dryer at the same time, that you hadn't accounted for that, all of a sudden your mortgage payment for that month is kind of gone. When it comes to a deposit, Vinnie, I'll give you this one. Should you know, you could go for a 20% deposit. But some places allow a 10% deposit. You know, some new builds might give you a 5% deposit if they've got a nice offer. should we be aiming for the minimum deposit, or should we be saving for a bit longer and starting with the 20% deposit to avoid those LVRs and extra costs?
That's an interesting question because we all want to buy the first home, right?
Yeah.
As soon as possible.
Totally.
But
It's a bit of a race.
It is a race because you see your friends have got a house.
Yeah.
You want to be there. I would go for a 20% deposit, and this is the reason. Because 5% deposit will mean higher repayment.
Yeah.
And long-term repayment as well. But to do that, I will, before you buy a house, and if you're not a good saver, I'll increase your Kiwi Saver contribution. Because that's the money you don't touch.
Yeah.
It's for your retirement, right? Don't look at how the Kiwi Saver is performing, but go increase the payment contribution. And then you'll have a plan, but before the plan, have a budget.
Yeah.
How much can you, and look out, if I contribute 5%, what will the repayment be? 10%, 20%. If you go on sorted.co.nz, BNZ, ASB, they've all got these calculators.
Yeah.
And then what you should do is, when I bought my first house, I calculated at a 8.5 or 9% interest rate.
Go high, right?
Yeah.
Go high.
And the reason is, if the interest rate is low, you can pay a high, cut down the short payments, get rid of the principals. But what if interest rate were go to high? Remember, like when I was at Westlake, I think back 1999, 2000, where interest rate was quite high. And people were struggling. At one stage, I was struggling. But I had 3 months of savings for that rainy day.
Yep.
So if I were doing a 20% deposit, save for at least 3-4 months, have a buffer, and execute your plan. But also, it's always good to celebrate your small success. And just when you achieve a small milestone, celebrate. First 1,000 is the greatest success.
Yeah. It feels good.
It feels amazing.
Yeah, totally. And it's like getting rid of a credit card or paying off your student loan. It's those feelings of success. Whether it's going up or getting rid of debt, it all feels kind of the same because you're moving in the same direction, right? And you're right, you should celebrate it.
And the thing is, when you buy a house, doesn't matter whether it's a small house, big house, it is an appreciating asset because the value will go up eventually.
Eventually. Exactly, yes.
That's why I'm sitting there right now. Going,
don't look. It's like your Kiwi Saver. Don't look at it at the moment.
But I do.
Don't. I know. And all you do is get depressed and upset.
Homes.co.nz's emailing me going, your estimate's been updated. I'm like, what is it? Oh, it's cool. Another 100 grand's gone. Great.
Yeah.
My Kiwi Saver is
scary.
It is scary.
My Kiwi Saver has gone from, I'm sitting at 114,000, about 15,000 gone down within the last 2 months. Yeah. But I'm not worried.
No.
Mine dropped by 5.
Thank God I'm not 65 yet.
But imagine if that was your...
retirement money. Yeah. Or your deposit on your house.
Just your checking account.
Yeah.
If 15 grand disappeared, you'd be like, what the fuck's going on?
I know.
100%. Where's my money? Where's my money?
Exactly.
You just got to blame Donald for that one. But, and that's the thing is, you've got to be in control. Like, I think if you control your finances, then it doesn't matter if somebody overseas does something. You've got to have your plan in place. You've got to know you've got your buffer. If something goes wrong, you've got to have your insurance in place so that if you get made redundant or get sick or whatever, you've always got your risks protected. Like no matter what happens, try to insulate yourself from all of those things that can happen. And when house prices go down, look, they've always gone up and down over the years. And I always describe it, it's not a circle. Like people think the property is a cycle or circle. It's not. It's like a screw and it goes up like this because prices were low. When I bought my first house, no one would want to know what that was because it wouldn't even be a deposit today.
Yeah, no.
And they
I'll get angry if you tell me that.
No. I've got to tell you, we worked 2 jobs to have that house and we had a big budget. But the prices kind of do this and they just go up over time. They may not go up at the same rate all the time, but at the end of the day, you're giving yourself security of living where you want to live as well.
Yeah.
And don't look at your value of your house. Don't look at your value of your Kiwi Saver. You've just got to know you've done the right thing. You've just got to make sure that you can afford what you've got.
And stick to your plan. Katie and Shelley from Enable Me said the exact same thing in the last episode. Ignore the stuff you can't control. Build a plan, ideally with an expert on your side. Then execute that plan as best you can, controlling what you can control. Something that's totally within your control, how much stuff you buy. and how much debt you take on.
Yeah, today I think, unfortunately, we have these expectations of having all of this stuff.
Yeah.
And like my daughter's 20, and like I know I've given her so much over the years. She left home, and her first thing she said to me when she went flatting is, "Mum, the power bill was $250." I'm like,
Yeah, welcome to the real world,
and
buddy.
our power's dropped by $200. Yay!
Stop leaving your GHDs on.
Yeah, well, exactly. And the thing is, like we set them up because we have all these things, and then when they leave home, they have expectations they can have all of that stuff. And I think when we talk about the debt situation is the kids go out thinking that they can have this lifestyle, but they can't afford it.
Yeah.
When you first start working, you can't afford those things, so then they end up with all the debt, and that's not what we want them to do.
And social pressure, through Instagram stories.
I know.
It does make it difficult. I know I'm guilty of it too, seeing what other people are up to and thinking, well, but
they've got it, why can't I?
Yeah, I work hard. I want a boat.
Yeah.
I always come back to the boat. It's a bit of a gag. I'm not actually going to
buy a boat or a horse.
Yeah, I'll just use other people's boats. It's easy to say don't get debt. But for a lot of people, myself included, the appeal of taking on a bit of debt to get something that you really want or think you really want can be hard to ignore. We're constantly being marketed and advertised to go and get the latest credit cards or bank overdrafts or to take advantage of a hip, shiny new buy now, pay later scheme. If you pay it off and cut up the card, good for you. But if you don't quite have that level of self-control, what are some of the potential consequences of debt? Vinnie lays it out.
It depends. If it's like, say, for example, take student loan, right?
Yep.
That's a good debt.
Yep.
That's an appreciating asset. House is a good debt. That's an appreciating asset. Credit card, not so much. Payday loan.
In fact, that was probably a polite way of saying it. Definitely not.
No, yeah,
Definitely not.
No.
Definitely not. I've never owned a credit card. I'll tell you one thing. When I was a student, on orientation day, 3 banks came to me. $1,000 overdraft. You might remember that.
Yep.
I signed all $1,000 overdraft. 3 weeks later, I spent that money, then realized I have to pay it back.
Absolutely.
And then I realized I don't need that. And coming back to that, so what the bank will look at your income, your expenditure. Are you saving money? Are you not? Are you living paycheck by paycheck? If you are, how the heck are you going to pay the mortgage, of which will be repayment might be $300-400 more than your rent?
Yeah.
And how can you afford to do that? And plus, they'll look at interest rate. What if the interest rate starts going up? How can you do that?
Yeah.
I think they will look at 3 months worth of income expenses, a history of how you spend your money, how you earn your money. I think the other thing is like coming back to kids. I don't know, this younger generation, I've got cousins, they got given everything, free cars and everything, and they still expect more. They don't know the easy money for them, right?
Yeah,
the
totally.
value of money.
And which sometimes frustrates me because literally my parents gave me one thing, which was the best thing, ethics to work hard, be honest, and give it your everything. And that was quite a good thing. So bank will look at that and come back to you and say, hey, can you afford it or not? But in order for you to do that, before you go to the bank or anywhere, try to change your behavior. It takes 30 days to change your behavior. Instead of taking your FOS card or debit card to work, leave it at home.
Yep.
Don't take it. Don't buy lunch.
Delete it from your Apple Wallet.
Yeah.
Oh, I don't even do that, mate.
Yeah. I've finally just decided to take it out of my Apple Wallet because it was too tempting. It's just always there.
Yeah.
And as we know, having a credit card can increase your spending by nearly 30% just because it's there.
And getting back to your questions about what the banks look at with regards to credit cards and other debt, they look at your limit, whether you use it or not.
It counts as risk, right?
$10,000, they allow 3 or 4% of the limit, and that is what you can't afford on the loan.
Yep.
So if it's $300, that's $300 less that you can borrow, which can be a good thing, but also your spending. So then they're taking in consideration what your spending is and the limit on top of that. So it's like a double hitter, really. So it does make a big impact. And I think, as Vinnie's saying, not having a credit card is the best thing. It's the best thing I ever did.
Yeah.
Having a debit card and having my account structure so that I have a set amount that I can spend each month. It's on my debit card, and once it's gone, it's gone. Like, that's it. There's nothing else to spend. Rather than going out, which is what I used to do, and I'd buy something and go, it's only $200, that's fine. Then you get your credit card bill at the end of the month, and you're like, oh my God.
It racks up.
It's $1,000. How
totally
am I
racks
going
up.
to afford that's all my disposable income gone for the next month.
And
it is like this trap you fall into.
On top of the fact that you don't even need to enter a PIN or sign anything anymore.
No,
It's
just tap.
Wave it towards the general direction of someone and you've paid for it somehow.
Yeah, someone told me they just call it their tap. And I was like, oh my God, that just is not a good thing.
No.
A friend of mine said to me on the weekend, said, oh, you know what, I'm just using credit card for my air points. Then I went on Air New Zealand's website. I've sent him the link. You need to spend $175 to get 1 air point.
I know, Vinnie. This is the reason we still have a credit card. It's the Air New Zealand Air Points.
Give it to me, mate. Give it to
Man,
me.
I don't carry it with me, but we still run our household through the credit card so we can get air points. But it is a bit of a have, right?
There is organizations like, if you look at AIA Insurance and other companies, where you register with air points. So every time you pay a premium, you get air points.
Yep.
So I do my air points through that. But I do not touch a credit card. And there used to be flybys and things like that. I said to my mum, this is waste of money. Because when you go there and they'll say, 2 flybys points, and if you spend extra $10, they're telling you to spend more money.
You get free shipping if you spend an extra $10, and you're like, what did I buy?
Because also, let's not forget, if you've got like a platinum credit card, you're paying $150 a year just for the pleasure of having that card.
That's
so
right.
you're already 150 in the hole. So
Yep.
unless you're earning at least 150 air points.
Yep. It's a big hand.
What's the point?
Yeah, it's a bit of a paradox,
And,
right?
and it does allow you to overspend because it's...
But listen to the advice I'm giving.
I know, you're
Why-
so good.
I'm so good.
You're so
Yet
good.
why am I still doing it?
Do you need a new job?
I constantly need a team of about 10 Enable Me coaches to walk around with me and go,
Following you.
no,
Don't do it.
Reagan,
It's
Laura,
like, it's
stop
blinking.
it.
Do you know what I always say? It's knowing what your kryptonite is.
Yeah.
Because if you know there's somewhere you're going to go, and if you walk into that shop, for me it's Millie's up in Ponsonby, or now I'm down in Christchurch, it's Valentine's. I can't go into those shops because I'm like a magpie. Like I will go and go, oh my God, I don't have that in that colour. Then I'm like, no, Karen, you don't need it.
This is not sponsored, but I do love Millie's Kitchen.
I know.
The Le Creuset items in there.
I tell you, I've got some of that. But and I think it comes to needs and wants, and I think you've just got to say, do you actually need it? And it's you walk into a shop and you're blown away by these beautiful displays and all this lovely stuff. But the big thing I learned is I walk in and I'm like, do I really need it? And I don't think I really need it. So I walk out the shop, go around, do some other stuff, and then I think to myself, out of Millie's, do I really need it? Do I want to go back? And most of the time I go, actually, I don't. I can't be bothered, so I keep away. But I think you need to understand why you think that you need things when you don't want it. What is it that makes you want to buy it? And, the whole thing of having your credit card. I said to Vinnie on the way over, you think about kids. Kids sit and they watch their parents tap.
Yep.
And then suddenly they've got these lovely things. Mum, I want this. Oh, okay then. Minute of, let yourself down. Yes, daughter, I'll buy that for you. Tap, and your kids are like, wow, if I have one of those.
That
all I
magic
need to
piece
do
of
is-
plastic. Yeah.
So we find with a lot of our clients, they say, our parents weren't great with money, and we do learn a lot from our parents. We watch them. My daughter doesn't listen to a thing I say, but she has watched everything I've done. Tap. She wants a credit card. So don't get a credit card.
Absolutely
the minute you
not.
get a credit card, it's like you're falling into this hole of debt. Like Afterpay, same thing. If you can't afford it today, what makes you think that you can afford it next week or the week after when you're still having to pay it off?
When you've delayed the payments for no real reason.
Exactly, and it's not normally something you want.
Okay, so what if you didn't take that walk? What if you've gone and bought a whole bunch of stuff you didn't really need? Or you've found yourself in a bit of strife through no fault of your own and had some unexpected expenses that have left you in the red. How do you deal with that?
If you're in debt at the moment, no point panicking how you get there. The main reason is, how are we going to get out of it? And that's the most important thing. Your behavior yesterday, last week, 2 weeks ago, no one cares. It's not going to change what has happened. How will we go there? And, the reality is, it's not the end of the world. You need to have a plan. And you need to go out and sit there and say, how did we get there? What are the things I'm going to cut down on? Online shopping, go straight away do it. I remember when I did my first online shopping, I got an email from them on the subject line is, we care about you. I said, man, I don't even know you. But then again, when I opened the email, there was a discount for another product. Temptation was to buy it. As I said, no, I don't buy online shopping, nothing. If I need something, I go to the shop. If I buy it, by the time you get there with traffic frustration and things like that, then you realize, actually, do I really need it?
Yeah,
Or should I go away?
Yeah. Put some barriers in front of yourself, create the obstacles.
Yeah.
My good therapy is, if I want to buy something, I've got a husky. And
As in the dog.
as a dog. But
Not the chili bin.
No, not the chili bin.
No.
Just checking.
There's another conversation there.
Yeah, great product if they want to also sponsor the podcast.
Yeah. But I take him for a walk. And when I take him for a walk is if I want to go and shop something, I don't even put my earphone on or anything, just go for a walk. Nice fresh air on the beach in the morning. It allows me time to think, actually, do I need it? The other thing is like when you are in debt, it's very stressful. It occupies your mind, it's an impact on your family, relationship, you get angry, it leads to addiction and everything. First thing is you have to recognize you have a problem.
Yep.
It's like AA, isn't it?
Yeah, going to the meetings.
That's why I've got Shopaholic on my debit card.
I remember talking about this in season 1, walking around work, when we were at that moment where we were close to just having zero money. We were out of savings and the mortgage payments were just so high, and just walking around work and just feeling terrible and snapping at people just because it was so consuming.
Stressful. Wake up at night, in the middle of the night, not sleeping.
Yep. Those are the financial freakouts we're trying to tackle this season. And I think just the day after I went to my first enablement session, it was just like this weight had been lifted. The problem hadn't gone, but we had guardrails. Someone else was creating a picture of how we were going to get out. And it's just such a great feeling. Even not, like I said, we weren't out of the hole, but we had a ladder all of a sudden, and it is a great feeling. Turns out me having that great feeling has led to others having similar experiences. This next bit kind of caught me off guard.
I had a client that came and saw me in Christchurch a couple of weeks ago, and he's a truck driver, listens to your podcast, and he said, I thought I was like the only person that felt that way, and listening to you talk about your situation made him realise that there is a way out of it. You can't sit there and pretend that it's not real, but also to realise there's other people in the same situation. So he came in to see me and with his wife, and we sat down and I did all the numbers, and at the moment they wouldn't be mortgage free before he retired. And then we worked it all out, and I worked out that he was going to be mortgage free in like 7 or 8 years, and he was just about crying. Yeah. And he just said, I didn't realise this was possible. And I said, well, no, he said, I can still go for a beer with my mates because, Reagan said that he was still able to do that. And I said, yes, you can do that.
It's non-negotiable.
We're not trying to suck the joy out of your life. We want you to have a really nice life, but to get rid of the fritter, because that's where that money disappears, that enables you to get ahead. And when they came and saw me a little while ago for their first review of their plan, they said, we haven't even started our program yet, and we're already starting to think about where we're spending our money. Like we walk around, turn lights off, the air conditioning's not going when we're not in a room. When we go to the supermarket, we're really thinking about, do we need things? And he said to me, he was just so happy he'd listened to you and how they felt already it was changing their lives. And they hadn't really done a lot. They were just starting the program.
That's amazing.
That is so heartwarming to hear, because we sit in a studio and we have really great conversations, but knowing that it's actually changing people's lives. Honestly, I was just so stoked to hear about a Where's My Money listener going and getting sorted. It means I'm doing my job and that the conversations are working. That guy sounds like he's still pretty early on into his road to financial fitness. Someone who's a bit further down the track is Challen Wilson. She went to Enable Me a few years ago to get her finances well and truly worked out. She wasn't drowning by any means, but she knew she wasn't progressing in any kind of positive direction either.
I was in kind of like a no man's land. Right. I wasn't saving money. I wasn't, my investment I had this little spend on an investment with Sharesies, and I really didn't know how to work it properly. Still kind of trying to work that out. But just ground zero, hadn't bought a house, wanted a house, and my savings were pretty non-existent.
Yeah.
And so...
And how old were you at the time?
Yeah, about 44.
You're 44, no house, no savings.
No
kids?
House, no savings. One daughter who at the time was about 19, is now 21. Trying to be a role model for her as well. Trying to live these dreams, but actually not knowing how to do that. Not really knowing my relationship with money or the language around it. So it just made sense that when Hannah was talking and putting all these dots together around understanding your relationship, understanding your language, and then putting the right steps towards reaching your dreams. So I really resonated with that.
And so you got connected with Karen, obviously, at Enable Me as a coach or strategist. And
yes.
Before we get to that, though, when you grew up, what was your relationship with money? How were you brought up with money around you?
We didn't really think about how we spent. So I come from quite a large business family, and so a lot of the making of money was happening over there, and a lot of the spending of money was kind of happening over here. But I never really got taught the real keen ways of how to make the money. I guess. So I kind of picked up some bad habits, I'd say, and I don't know. We're kind of, what are those people called? That fritter. I'm a fritterer, and so I never really. Money just comes in, I do things, I work, I do diversified my kind of portfolio of earnings, so I just kind of make money and then it goes, but then it's not long lasting, like long-term saving.
I think we were in the same position when we went to Enable Me. We weren't shit with money, but we weren't good with money either.
Exactly that.
It comes in and it goes out, rinse and repeat, but there's no real goal that you're moving towards.
Yeah, or if the goal is there, is actually like, oh, how am I going to get it there? Oh, I need that new shirt.
Yeah.
Oh, I need to go over to Australia for the weekend.
The goal constantly changes and moves.
The house is still there, but I'm not getting any closer.
Yeah. Do you see this a lot, Karen, in clients at Enable Me?
We see it all the time.
Yeah.
And I think the one thing as a coach, we can see things on paper and go, actually, there is no reason why you couldn't get where you want to go. It's just a matter of having a plan and understanding what you're capable of. And so people, often will just think, well, I can't do it, so I just give up on it, you know. And it's like shopping, like if you're a shopper, you think, okay, I've just spent money, but actually it doesn't matter. Like I've just spent it, so I might as well spend a little bit more.
Living in the moment.
Yes, is a bit more. What's an extra $200? But it keeps all building up. So, I think it's often having a financial plan is all about seeing what you're capable of actually doing, and understanding, as you say, your relationship with money, just what are the things that you need to think, okay, I need to stop doing this because if I keep doing this, I'm going to get the same result as what I've always got. So, I think often people don't understand the situation they're in, good, bad or indifferent, and sometimes when you sit down you have a bit of a reality check, but you actually can see what you're capable of doing.
And so when you met Challen, was it easy for you to see some pretty achievable goals straight away?
Sorry.
That's good. I think you could read me so easily, so then you knew how to fix me.
Yeah.
What were some of the low-hanging pieces of fruit here that you could just go, we're starting with this, Challen?
Okay, I got to say, Challen is one of the most amazing people I've ever met, who actually doesn't understand that she is an amazing person. I don't think you do.
I still go, Karen picked me, and I still feel very humbled by that, because she's right. You need to tell me what it is that I'm doing amazing, because then I'll do more of that every day, every second of my life.
So Challen's was on a journey with her MBA. She's working, she's got a family, she's helping to support extended family as well, and she's trying to get ahead, which I think, when you actually try to do something, is actually quite courageous to do. And I'm thinking, how is she juggling all of the stuff, like this job she's got a company as well, she's got a daughter who's similar age to mine, and I know exactly how they suck money out of you, like in the kindest way.
So you're a high achiever already.
She's this high achieving person who just couldn't quite work out how she could move ahead. So totally floating with her financial situation, but should really be flying, because she's flying in all these other areas of what she does. To be capable of doing an MBA while you're working and, everything she does. I'm like, it's not difficult to look at the money habits and understand that you're such a busy person and life is busy, and sometimes what happens is we're busy, we're taking care of everybody else, but we don't always take care of ourselves. And it can be the habits of the KFC, and we've had a few quite
guilty.
We've had a few discussions about, like sometimes you're so busy you don't actually make plans for, things like, prepping for food or going out and doing your walks and things that you enjoy doing and spending time with your family, doing the things you enjoy, because you're just running around chasing your tail all the time.
Yeah, totally.
Yeah, making money for other people.
Yeah.
And then forgetting how I need to make money for myself, even in the business sense, even in the consultancy. It's all about looking after the client, and in the gardening business, looking after the customers.
But when you hit retirement and you're keen to stop working,
I know.
Who's there?
who's consulting
Scary.
for
No one.
who's consulting for who?
Who's got me?
It's you,
Right.
and
Yeah.
you need to make sure that you're set up right. So what were some of the goals that you put in place with Challen to make sure that she was?
Some of it was actually just about having conversations with people in her life.
Yep.
And I don't know how you're going to go with this, but like, I've got a daughter that's the
Safe
same
space,
age.
guys. Safe space, apart from all the people listening.
Look, and it's so easy to say this, but it's really hard to do. Like, our kids, for all those years depend on us to provide for them, but there has to be a time when they actually have to provide for themselves, and they have to do the things they're doing. And Challen's daughter is amazing. She's got a great job. She's starting a good career.
She wants to start a gin distillery. She started doing business planning.
She wants to
Awesome.
buy her own
into
home.
financial
Great.
literacy classes.
The apple
through-
clearly doesn't fall far.
Yeah,
Yeah.
she's driven to want things, but also she's my only child, and so I probably am a little bit of a kind of
Spoiler a little bit.
Yeah,
a little
a
bit
bit
of
of
a
a spoiler.
spoiler.
Yeah.
yeah.
And I think one of the conversations that we've had is the fact that, she needs to be financially independent, because
Cut the cord.
Yeah,
Cut the cord.
and it's so easy to say it. It's not easy to do it.
Yeah.
Because we care for our kids so much, but part of caring for them is actually letting them be independent and to, do their thing themselves. And I said to Challen, like, she's got a good job. She's earning money. Does she have stuff arriving? And Challen's, yes, there's parcels arriving,
Every second day.
The iconic.
Yeah, all of those things. And I said, so you actually have to be selfish, which is really hard to do, and you have to think for yourself, because when you're in your late 40s, 50s, etc., retirement is so much closer. And yes, you're helping everybody else, but will they be there to help you when you retire, as you just said?
Yeah.
And that's not always the case. So we have to look after ourselves. And I think that's one thing that probably you've struggled with a little bit, because there's car insurance that's being paid. And so we had a discussion one day, and she didn't tell me, but her daughter was actually listening to the conversation.
Yeah, well,
And I'm
I
like,
she was
put up her
upstairs and I
board,
was downstairs.
Stop paying
Kids
her
are always listening.
medical, stop paying her car insurance, put her board up, she can afford it, a bit of pain for her, gain for you. And then she's like, she's listening. I'm like, oh no.
Yeah, she was so mad.
I do feel like when she,
I was a bit scared.
it's hard conversations now, but I think when she's your age now, she'll probably really appreciate that.
Yeah,
you
that's
taught
what
her
I
that
think. That's how
independence.
I think about it. Is
Yeah.
actually I'm not helping her by giving her such a cushion to lean on. She'll have no smarts, just like my parents. They didn't teach me anything. They just like, here's a car, here's some money. I'd ask and they would give, and then I went out by myself and I sucked at it. I sucked at the money game, and had I known all sorts of things that I know now, life would be different. And whilst we've got her investing, she's got a good job paying good money at 21, she doesn't have a degree, and she's a team leader or manager at McDonald's, and they've really looked after her.
Awesome.
Taught her all sorts of things around operational management and things like that.
A really rosy future ahead
Yeah,
of her.
she
hasn't
has. She really does. We're setting her up with life insurances and things like that. I feel like I'm living my life so that her life is better than mine was when I go.
Perfect.
Yeah.
That's great. But now also
I've still got to
focusing on you.
Yes, focusing on Challen.
And so what goals have you ticked off now since working with Enable Me?
The biggest thing that I have to I know this is only small, but having the structure in my bank accounts, knowing what's going out through APs, what's being saved, and what's the day-to-day, like that revolutionised my life. Going, and talking about we used to spend like $900 a fortnight on food,
Whoa.
for a family of 2.5, or actually 4 because of the boyfriend as well.
Not your boyfriend. Well,
Not my boyfriend,
Her
my daughter's
boyfriend.
boyfriend, my partner and I, and my daughter.
Another one. Cut the cord.
Oh my God! Yeah, go and stay at your own house. No, just kidding. He's lovely. He's a lovely boy. But yeah, so we're exorbitant amounts of money on food that we...
It stacks up, eh?
Yeah, and it stacks up, and like it's ridiculous. Like we cut that down. That was really good, because also there were health issues there around increased weight gain and things for me and other stuff like that. So that helped in the health side, and also knowing that I could save money, like actually seeing it in the savings is like having a savings bank account that just kind of makes my day.
With numbers in it.
With numbers in it,
rather than just an empty suffix in your banking app. Like actually watching it grow. Yeah, cool.
Yeah, and then knowing that there are ways to grow that money as well. Yep. That's another thing for the future, for my future, for a rainy day as well. All of that stuff. Like, I know they feel like real basics once you learn them. It's like, how did I not know this? Oh gosh, but somewhere it got lost.
But you got to start somewhere, right? Yeah. And you got to feel good about money, and like you say, the APs and your bank account structure might seem like a small thing, but now you're in control of it. Like it doesn't mean to say there's $1 million sitting in there, but you're in control of everything going on. You know where it all is, what's coming in and going out. It's yours. You're controlling it, not it controlling you, and that's real empowering.
That is so good. I mean, I think you used that line with me about me being in control rather than it controlling me before, and it's like, absolutely, like that's a relational thing as well.
And so getting a house, that's one of the goals. Where are we at with that?
Yeah, so being of Ngāi Tahu descent and also being connected to other iwi that are really focused on empowering the whānau that are within those iwi. They have different programs around house ownership. So whilst I've been able to increase my own, what is it called? The Kiwi Saver and things, and start doing iwi Saver investment through Ngāi Tahu, being able to engage in these other programs I'm closer to being able to do my part, and they help a little bit than what I was at least 4 years ago. So,
and I guess everyone's in different situations. People might not have access to programs like that, but it's any lever you can pull, right, to elevate your situation.
Like having a little like savings for their kid. It's kind of like that, because it's like my tupuna or my ancestors, my great decided that this is kind of the way that we would head with some of our ancestry, and that is helping the whānau to thrive and have successful lives.
Awesome.
So same thing as a family dowry, I guess.
And there are other like shared equity kind of programs out there available for people, and often people just aren't aware of what's available to them. And it all starts with being able to try to save. Like, at the end of the day, you have to put so much money into it yourself, but you don't have to have rich parents. You just have to be able to access some of the different shared equity loans that are available.
So accessing that, and also the way your bank accounts look to the bank when you need to get a mortgage.
Being bank ready.
Being bank ready.
Being bank ready,
as well, like
your bank statements look amazing because you actually are in control of what your spending's like.
They can see that, so that you're more trustworthy, I guess.
And working in the bank, when we had the triple CFA come in, and it was all like, it was always in the media, how many coffees are you buying a week? Do you spend money on this? And
avocado on toast.
Exactly. Especially avocado on toast. I mean, luckily the banks aren't looking at it in that way now, but there was that at one stage. But we always say, like, you've got to have a good life. Like, we don't want at Enable Me as coaches, we don't want you to come in here and your budget is so much that you have no joy in life. You've got to be able to do the things you like doing.
I wouldn't have lasted at all. I wouldn't have been able to do it.
It was really nice to meet Challen and see more positive impacts of getting the right help to get your finances on track with a solid plan. Speaking of the right help, Enable Me founder Hannah McQueen is back to answer more questions from the DMs. This one's actually come from not a DM. This has come from Amy in the office downstairs, who found out you were coming to do the podcast today. She's like, oh my God, can you ask her a question? And I'm pretty sure we've answered this on the pod before, but I've said I'd ask it, and it's a really good question. Amy's just moved back to the country, and she's looking at hopefully buying her first home. Should she change her KiwiSaver to a conservative fund if she's looking to buy a house this year?
Yes.
Yes. That was the most hard and fast answer I've ever got from you. Totally. And why is that?
Because when you know you're about to make a withdrawal, it is very important that the money you thought you had in that account you can withdraw that amount on any particular day. Conservative funds or even defensive funds have less risk or volatility or movement of their balance. And as a result of that, the certainty of withdrawal is more appropriate there. So that the general rule is if you're wanting to withdraw money kind of inside of 2 years, it should be between a defensive and a conservative.
2 years, wow. Okay, so that's helping us plan for our investment strategy and making sure the money that we're building the rest of the numbers with doesn't change or changes as little as possible.
Well, that's right. And practically you saw it, well, I saw it in COVID where I had one client was buying her first home and she was wanting to take maybe $30,000 from her Kiwi saver to complete her deposit.
Yeah.
And the night between the COVID whatever
lockdown
debacle,
for number orange. Yep.
Yeah, so her fund went from 30,000 I think to 24,000, and so the next day she was supposed to be settling and she was $6,000 short. It's like, honestly, where is that money supposed to come from? And that was because she just happened to be in a fund that
it was quite aggressive.
Yeah, and the bottom fell out of it.
Okay. That's great advice, and I'm going to pass that on to Amy. Thanks for your contribution there, Amy. Next question. I'm a single parent with 2 kids and a pretty steady job, but I can't seem to save a house deposit. I feel like the goalposts just keep moving further away from me. What are the first home buyer schemes or tricks that I might be missing here?
Yes, you might need to think about buying an investment property rather than a home, and maybe a property off plans with a very long settlement. I'm talking maybe 3 or 4 years.
Yeah.
And the goal there, and it is risky, is you're paying a deposit with the expectation it's going to increase in value between now and then.
By the time it's built.
Yes,
yeah.
And sometimes developers will backfill you to lift your deposit so you qualify for a mortgage. That's sort of part of their offering on the day. Or that if you could introduce the option of selling it, and so you're backing yourself that you'll be able to sell it for more than what you paid for it. And this is introducing risk, so I'm not saying that there's a guarantee with any of it, but if the other option, which they're in at the moment, is, well, they're guaranteed to not achieve it, should we at least try and throw something at solving the problem?
Something with risks versus something that is just guaranteed zero.
Exactly.
Yeah. With developers, though, New Zealand's got a kind of speckled track record with some developers going under and people and losing people's deposits. So that's a risk as well, right? Not all developers are like good to go.
Well, some of them are. I think dealing with any business, there are some dodgy people in all industries. There are rules that you work to that minimise the risk. So you'd only work with a developer if they kept the deposit in a trust account, so they can't even access it.
Yeah.
If you're looking at a contract that requires the developer to use your deposit to make the whole thing work, I would walk away from that developer. That's someone whose financing isn't strong enough for me to want to put my money in. So that would be a hard no.
So that's because at that point, you're not investing; you're actually funding their projects, and that's entirely a different kettle of fish.
Yeah, and the deposit should always be, it's a no-go. That's sort of sacred territory. So what are they doing with their little mittens on that?
Yeah.
So that's just a red flag to me. Sometimes if you're paying for things as you go, so more of a land and build contract rather than a turnkey contract, you are taking on the risk. So the developer isn't even handling the financing. If you were going for turnkey, they need to have good finance in place. So you'd want to understand what financing they've got in place. And the bigger the project, the more concerned I would be generally, because that's a whole lot of funding tied up. Whereas if they're only building one property at a time, there's not all that much risk attached to that. So there are different ways to scratch your back on it, but
do your research and probably get a good lawyer to look at the
always
nitty-gritty little details.
Yep.
Cool. We're considering selling our Auckland home to move to a smaller town for a mortgage-free life. Doesn't that sound lovely?
That sounds good.
Is this a smart long-term move or a bit of a financial trap? I'm worried we'll regret it if the Auckland market bounces back and we could have made more money further down the track on the sale of our home.
Well, often it comes down to what's next. So if they downsize, which is good, and it removed their mortgage, which lowered their outgoings, and let's assume their income didn't drop by all that much, and they haven't sort of rooted their income potential by moving to a small town, and we channeled that money into growing an asset, then it still can work. the risk for them is if they wanted to move back to Auckland. And so what people find often when they do move to these small towns is sometimes it can be interesting to integrate into the towns. And if your close friends and family are back in Auckland, that is a pull to want to come back.
You get the itch after a couple of years.
Yeah, normally about 7 years you've got the itch. And so then it's going to become harder to come back if the Auckland market has bounced back.
Yeah, okay. Good things to consider. I bought an investment property last year. Congratulations. But interest rates haven't dropped as fast as I was hoping. It sounds like they were a bit of a gamble on that one. Yeah. I'm struggling to cover the mortgage as a result. Should I hold on, refinance, or sell my way out of there?
Well, interest rates have dropped a heck of a lot. So perhaps they're fixed for too long and they're not benefiting from the drops.
Or possibly they were waiting for those, what are they called, the sugar high interest rates of COVID of 1.99%.
They're not coming. But yeah, okay. So I feel where he needs a plan before we work out what his options are. It makes me a bit nervous that in the current interest rate environment, he's still struggling to hold. Now, if he was to sell, I mean, as you know, realising loss unless I know that with that transaction I can do something else that's going to make up that loss and make you better off than if you had just done nothing.
Yeah. Similar to us.
Exactly.
Now. Yep.
The stakes are higher. So I just want to understand that. Sometimes refinancing to another bank could work, but if he's only bought the house last year, that could be problematic because you'll have to pay back the cash incentives. You might have a break fee. It just feels like we need to plan this a bit better.
More info required, but also this is why you get an expert on your side.
Yeah.
Talk to Enable Me. That's it for this episode of Where's My Money? I hope you took something out of this episode that you can think about or even put into action today. If you didn't, even just continuing to talk about your money matters is so important, so please just keep doing it. Make sure you subscribe to the pod on the platform of your choice, including now YouTube too. Yes, you can see me, which I don't know if that's a good thing or not. Anyway, if you want to do that, you can. If you've got any questions for Hannah McQueen or any of the experts we get on the show, get in touch at Where's My Money NZ on the socials. We always love hearing from you. We'll see you in the next step, where I'll keep on asking that big old hairy question, where's my money?